Hello guys, welcome to my YouTube channel. Today I am going to start new topic, that is marginal costing. In general meaning, marginal costing can be defined as the technique of costing only variable costs are charged to operations and all the indirect costs to be written off against profit. In general meaning, absorption costing can be defined as it is a practice of charging all costs, both variable and fixed, to operations. It means it charges both on variable and fixed costs. Types of cost. There are two types of cost: direct cost and indirect cost. Direct costs are expenses that can be easily traced to a specific product or service, such as the cost of materials or labor. Indirect costs are expenses that are not directly traced to a specific product or service, such as salaries, rent, utilities, and office supplies. Indirect cost, further classified into factory overheads, administrative overheads, and selling and distribution overheads. Factory overhead, also known as manufacturing overhead, refers to the indirect cost associated with the production of goods such as rent, utilities, depreciation, and maintenance of equipment. Administrative overhead refers to the indirect cost associated with the general management and support functions of an organization, such as salaries, rent, utilities, and office supplies. Selling and distribution overheads are expenses associated with the marketing and distribution of products or services, such as advertising, sales commissions, shipping, and warehousing. Selling and distribution overheads can also be classified into fixed cost, variable cost, semi-variable cost. Fixed cost means a cost which remains same and does not change. Variable cost means the cost varies and does not remain same. Semi-variable cost means it contains half fixed and half variable costs. Marginal costing equation. Profit is equal to sales minus total cost. Total cost is equal to fixed cost plus variable cost. Therefore, profit is equal to sales minus variable cost minus fixed cost. Contribution per unit is equal to selling price per unit minus variable cost per unit. Contribution in rupees is equal to sales minus variable cost. Profit is also known as P by V ratio. So that is also called as volume ratio, PV ratio. P by V ratio is equal to contribution by sales into 100. Sales required to earn a profit. So the formula is expected sales is equal to fixed cost plus desired profit by PV ratio. Profit when sales level are given. Contribution minus fixed cost. For contribution, we have to take the sales amount and we should multiply it with the PV ratio. Then we have to subtract with the fixed cost. So the second one is P by V ratio formula. P by V ratio is equal to fixed cost plus profit divided by sales. And next formula for P by V ratio. P by V ratio is equal to 1 minus variable cost by sales. If P by V ratio is given in information in 2 years, then change in profit by change in sales into 100. Guys, we have 4 formulas right for P by V ratio. So mainly I used for calculation is the first formula and the fourth formula. Break-even point means there is no loss or no profit. It means it is the same at the level. Guys, you may heard about break-even point in the SEM 4 business economics subject. It is almost same in this subject, but there is a slight difference. That is, it is in the economic side, and in this semester it is in the business side, it is management side. Formulas for break-even point. BEP in units is equal to fixed cost by contribution per unit. BEP in rupees is equal to fixed cost by PV ratio. BEP in rupees is equal to BEP in units into selling price per unit. BEP in rupees is equal to fixed cost into total sales by total contribution. Guys, there are 4 formulas right in break-even point also. So mainly I used the formulas, that is the first one and the second one. And the next formula is margin of safety. In shortcut, it is known as MOS. MOS is equal to total sales minus BEP sales. MOS is equal to profit divided by PV ratio. The second formula of margin of safety is very important, guys. Guys, today's session is over, and in the next session I will explain about features, assumptions and importance of marginal costing. If you guys have any doubt, please comment me in the comment section. If you like the video, please subscribe my channel and share my video to your friends. Thanks for watching my video and have a nice day.